Thanks. Can you hear me? Oh, gosh. Well, we'll start this again. You guys have been very patient. Okay? So today, I'm going to talk about price discovery and trade execution. And this is something I have to work at very hard. I'll come up with a strategy and I'll go, okay, what do I want to do it at? You know, what price do I think I can do it at? Well, it's generally not a real problem in a liquid product like the IWM or the Spider where markets are a penny wide. But when we're dealing with products like the NDX, the SPX, and the Russell, the RUT, and even Google, Apple, Priceline, higher price equities, the width of the market makes it more difficult to come up with the price, and the fact that sometimes we're doing four legs, as in an iron butterfly or an iron condor. Over the past, 2 or 3 months, I've noticed mistakes made by a number of my students. They'll put on a trade, and I'll look at the trade log, and I can't figure out how they possibly were filled at that price. And it's always in one of the big ones, the SPX, the RUT, or the NDX, or one of the higher price equities. So we'll go on. Here, my name's Frank Fahey. Many of you know me. I am from the Midwest, South Bend, Indiana, Rust Belt, America. And my first job out of college was working for IBM. Then I worked for Digital Equipment Corporation, which was the second largest computer company. I was in sales for both those companies. While in Chicago with Digital DEC, as many people know it, I came to the realization that there were a lot of people making a lot of money that weren't any smarter than me and nowhere near as quantitatively competent as me. Now, I quickly learned that, my good looks would only get me so far. But I went down there in 1984, started as a stock clerk on the floor because I wanted to understand the underpinnings of the market. In fact, all our communications were done from, 100, 200 feet away using hand signals. It's sort of a variation of the American Sign Language system. I was a market maker on the floor for nearly 20 years. I worked in a number of different pits. Worked with John and Pete Nigerian for 10 years. Not with them. I worked in their DPM, Designated Primary Market Maker. And I know those gentlemen very well, and they were good traders. Okay, a favorite saying of mine is, chance favors only the prepared mind. Basically, what that means is we need to be prepared well enough that no matter what the outcome or the situation is, we've run it through our head. Okay? And what is a prepared mind? It's common to high achievers across many high-risk professions. And those high-risk professions can be trader, and that's high risk financially. Fighter pilots, high risk personally from a danger standpoint. Airplane pilots, Sully would have never landed the plane in the East River if he hadn't gone through that in his head. I'm sure he went through it hundreds of times because it's not one of those things where you go, I know what I'm going to do. I'm going to land the plane in the river. He knew how he was going to do that. And so what we do is we constantly hone and expand our knowledge base. So that's why we have emergency preparedness situations. During the flu epidemic, our hospitals have been practicing for huge infectious disease outbreaks. Emergency first responders practice all the time. I was a lifeguard on a big wave beach on Cape Cod. I worked for, a number of places. Worked for the National Seashore. I worked at Nauset Beach for the town, and I worked for the town of Barnstable. Now, I was a ringer for the Cape Cod Lifeguarding Championships, but that did not preclude me from having to practice 3 to 5 times a week with the boats, with the paddle boards, with buoys, life-saving buoys. And so you practice constantly so that when there's a problem, you know what to do. An example of this was we had a riptide at Nauset Beach, and this is, some people may know it as a big wave beach. It's where the Gulf of Mexico and the Atlantic sort of intersect right at the knuckles of Cape Cod. Cape Cod's like a curved hand. And we probably had 100 people pulled out. I remember running down the beach, dumping out people's coolers, stealing their balls, and throwing them in a boat to throw out to people because so many people were swept out that we could not save them. The Coast Guard came and helped us out with helicopters, but I wouldn't have known to steal stuff from people on the beach unless I had been trained and my mind had been prepared. Well, it works in options. We see opportunities where others see risk. We can recognize and act across a complex set of conditions. Now, the Greeks are something that allow us to reduce something to a lower common denominator and reduce the complex to something simple. Okay, so as part of that, I challenge and test trading strategies. What if, what if, what if? I back trade to see what happens. I always back trade to when a trade does not work out the way I wanted it to work out. That's something that I learned from. And all this allows me to make an informed, cogent, reasoned decision. So the big thing is I'll recognize alternate futures. Okay, what if, what if, what if? So I always throw this in, I don't know why. But insanity is doing the same thing over and over again and expecting different results. So preparing my mind helps me to avoid the insanity here. This is a disclaimer. Anything that I present here is merely for teaching purposes. I'm not suggesting that you do these trades, you enter them. In addition, understand that these are based upon the settings that OptionVue or the trading platforms I'm referring to have in them. And that's something we're going to discuss, is how simple things like this, how you do the settings on your trading platform can influence your ability to respond to complex situations. So we'll move forward. Housekeeping. Okay, this is one of the most important things that we need to do. Okay, you need to know your trading platform and tools. Okay, so if you use interactive brokers, there's lots of training that is available online, number one. Number two, it's for all the different trading platforms. Options House, interactive brokers, Thinkorswim, TradeStation, TradeKing, all of them. I find there's an awful lot of people that want to dive in and start trading without knowing their tools. This is very, very important. Okay? And understand the source of all your information. Prices in Greeks. Okay? You'll find out that there is no consistency. For example, prices. How do they determine midpoint or market or whatever? What price comes up when you say, I want to do this spread? Where does it come from? How does it occur? Okay, so don't skip the training. And people want to. Oh, I know how to do this. I can't tell you how many mistakes I've seen doing this. Okay, an example is with interactive brokers. If you want to do an iron condor, what I would call selling an iron condor, what Thinkorswim would call selling an iron condor, interactive brokers calls buying a iron condor at a negative price. Trust me, make that mistake a few times and all of a sudden you'll go, well, trust me. Know what you're trading, understand what the prices are. That's why when you start off, it's probably a good idea to trade very small numbers when you're trading on a new platform. And when you first start learning how to trade, you want to have easy access to a user guide. You can either print it out or put it on the desktop. I have both. Actually, for one of them, I trade multiple desktops. I trade Monster at times, but primarily Thinkorswim and some interactive brokers, and they're entirely different. And the one thing that you have to do is check and recheck. Okay, so I'll do it there, and I know how to use the user guide. I know how to search in it. There's lots of things we need to do. Check all your user-defined variables daily. Don't assume that because they were right yesterday when you closed the machine, they're right now. Because there are updates of software. There are many things that can change what happens on the software. Know how to enter, cancel, replace, and close orders. I've seen people fumble around. This is why you do one lot or start with paper. You need to become fairly facile with it. And ideally as facile as your child or your grandchild is with video games. We're basically playing a video game there. And understand what contingency orders are. Stop limit, a day order, what good till cancel means, and the difference between limit and market orders. I've seen people who have been trading for not that long, 6 months to a year, basically enter their buys on the offer or their sells on the bid. That is a market order, essentially, a de facto a market order. Okay? And the most important thing is to understand what midpoint is and where, when your firm comes up, you're trading. One moment, I need to cancel some orders here, guys. Okay, and on another one. Okay, 1 second. Sorry about that. The market's moving. I trade, and it's moved enough that I needed to cancel some of the orders I had in place. But price discovery. There's a certain people will think, well, midpoint is the midpoint between bid and ask. Well, not necessarily. Different people, different trading platforms calculate it differently. And I'm going to show you some of those differences as we go along. They'll actually give you different bid and ask. And then the market depth. Okay, that's something every platform will give you one way or another. And I'll ask people if they look at market depth, and they'll go, no, why do I need to? Well, we're going to talk about that. So let's move on. I'm going to start with OptionVue and how we want to have it set up every day before we trade. This is crucial, and it changes. You need, every time, the second thing after you hit the start button and sign in, you have to go through. What you need to do is go to View right here, okay, on the main page. When you hit View, it's going to bring up a number of this here. You want to do System Default Models. Okay, that's one of the choices. Okay, I don't care what option pricing model you use. All I ask is that you use the same one all the time. It's very, very important. Okay, so I use Yates. Okay, you'll notice that I use also True Delta Gamma. I find that to be a truer representation of the behavior of options with movement of price of the underlying and movement of implied volatility. I uncheck skew curves. OptionVue defaults to use combined call put skews. Okay, this is something I change every day because I want to have my Greeks calculated and my risk calculated based on separate call and put volatility skews. This is volatility skews. So when I uncheck something, I'll hit this A, and what that'll do is go through every single product that I have underlying and calculate see what the settings are, and it does it one by one. So if it had been Black Scholes and I change it to Yates, I'll hit A because there may be an exception out there. Okay, I put slippage as none. There is small, medium, and hit, bid, ask. This should always be none. I don't care if the slippage is large. Number one, based on liquidity and ease of getting in and ease of getting out, you shouldn't be trading anything that you can't approximate the midpoint between the bid and the ask. You just shouldn't be trading it. You're asking for problems. We used to call something that with lots of slippage as requiring trading by appointment. You had to find the person that wanted to buy it, and you had to find the person that wanted to sell it. That's how we referred to it in the pits when I traded there. I don't include commission. Part of the problem is commission can be included. Your exit commission is often included on different platforms, so you'll get double charged commission. I just never do it. I look at bid and ask. I divide it by 2. That's how the Options Industry Council does it. That is how the individual clearing firms do it. Now understand, IB intraday does it differently. There's different platforms that do it differently. So they'll do it on the last, okay, if it's in between the bid and the offer. They'll do it on market on the bid if the last is lower in the bid, and they'll do it on the offer if the last is higher than the offer, intraday. And that's how we used to do it as market makers up until probably 1995. Now, I'm going to take a break here and see if anybody has any questions right now. Okay? Well, one thing is I want you to see this and make sure every day when you open it up, you check different software packages. And I've done this at times where I'll go, how did I change this? Now, I probably will change stuff on a trading platform. It ends up being changed because I've been sharing a screen and showing somebody something, and it's my mistake and I forget to change it. But some things just aren't saved. Okay, so we'll move on. What brokerage does OptionVue work with? That's a question for your salesperson. I enter all my everything, every trade I make, I enter manually into OptionVue, and it's worth it for me. And you know, I trade fairly large positions. I find it much easier to look at the graphs on OptionVue. Much easier. Okay, so that's what I do. But if that's what you mean by somebody says, I'm just unchecking the skew curve, you will see that there can be a significant difference in the delta even. I was looking at the April 1575 call, and right now I have a 19.6 delta on it. But if I go to my default models, God, mine is canceled. I reopened it. Okay, changing asset file settings, please wait. So it was 19.6 with it checked, and let's see what it is now. Okay, 19.3, so it makes a difference. Okay, but I do uncheck things, and this is all part of making sure that you get the right price. The one thing that I can't emphasize too much is this needs to be set at none, slippage, right here. set it at none. This is the matrix default model. So each matrix has its own default model, and the overall package does. But you need to know how to do that. There's a few extra things here. In the matrix default model, you'll notice there's something called volatility. Okay? If you click on that, it's going to ask you if you want, there's three choices on volatility. Variable, uniform, that means every option will have the same implied volatility, and EIEIO, which I don't check either. And I'm making fun of that. It's actually called something else. But here's another thing you need to check. Define. I put in the money and out of the money extent for strikes and calls, okay? And this is for the S&P 500, is large. People complain, well, there's too much to scroll through. Most option packages look at what you're displaying, or many do, to compute what implied volatility is. I want as many different possible inputs in there to help us to get the right number. You know, if I only display 4, that's all they're going to calculate. The Greeks, based on the skew between 4 different options. That is unacceptable. So I always do large. Okay? Okay, I'm going to show you something in just a moment. What this is this is set default. Okay? And we'll talk about what market depth is. That will give me a market price, a bid, an ask, a bid size, an ask size, and a delta. Now, one thing I can do with OptionVue is there's this little M right here. See where that is right there? That's for memory. And if you hit memory 1, it will save whatever you've set up on the screen. I can also click here and go to set default, click here, and set default. I use this when I'm trading, and I use this to look at market depth. I mean, there's a lot of information we need here, okay? But this is something I look at during the trading day. This is something I look at as I'm doing trades, or setting up trades. You'll notice here, and we can look at this. It goes bid size and ask size. Now, actually, I'm going to do something here, and it'll be probably even better. Oh, I can't do it because I don't know how to share my desktop yet. This is the new software package. But you'll notice as we look through here, this is 103 by 103, 10 by 10, 60 by 30. Generally, during the trading day, something could be 1, okay? And it'll be narrower or wider. I'll sit here and look at the difference between the bids and the offers. Well, what happens is if something's here, 1480 by 1610, and somebody wants to buy this and they make it 1520, they probably aren't going to buy it at 1520 because it's less than the midpoint between the two. See, we have the same size here. But you may see something where it goes 1 and a bid 1520. Well, what happens is, since that's 40 cents higher, this market price is going to be 1570. And they start calculating prices, the midpoint, the market price, based on these markets. It's important that we understand how they are calculated. Okay? Somebody asked, do I use Yates for all instruments, futures, stocks? I use Yates for indexes and equities. I would use it for futures on an equity index, okay? But corn, I don't trade corn. So I actually traded wheat options for 1.5 years, but I've never tested it. It works reasonably well. In fact, very well. I find the graphs to be okay, but I don't trade it. So I probably don't have the depth of understanding that you would like, but yeah, is it transferable? Yes, definitely. It can be used to do both. Okay. Uh, let's see. Do we have any other questions? Okay. So I set this up to give me a market depth. Okay. Quite often, I'll set this up to where I have delta here is actually what I have as quite often just trade. One thing I do, okay, I'm modeling. Okay, here's another market depth. Okay, this is actually from Interactive Brokers. Okay, the last here, and what's happened is I've used the closing. Actually, it was earlier this morning when I pulled it together. But we have the bid and the offer. Okay, and you can see that these are pretty good size. Except right here, look at this. There's an ask of 5 at $3.40, which means the midpoint between 570 and 340 is 455. Okay? If you use this, you're going to say, aha, the midpoint is 455. You know, do you want to buy or sell at that point? No. And I'll show you why. And this is why you have to know what you're doing at all times. Here is the same thing, excuse me, from Thinkorswim. Same iron condor. It's 1350, 1375. Let's see, 1575, 1560. Okay. And boy, I had a rough time getting this right this morning because these sizes kept on changing and the price had changed. Okay. But you look here, and their midpoint's 392. Okay. And instead of 340, their bid is 215. Now, you're going, why are they different prices? At Thinkorswim, they look at the best bid and the best offer on every single specific option. And they aggregate it and they come up with this. Now, at times I'm going to see bid size 1. I'm going to go down here and see, okay, where's the bid size 1 or where's the offer 1? And I watch what I trade all day long. Okay, I know where these trade over price of the underlying, time, and generally that's not that big intraday, and implied volatility. I mean, for example, today, right now, the VIX is down 0.89. The RVX is unchanged. It's up 0.06. And that's a measurement of Russell volatility. But at one point today, it was up 90. Okay? Or 0.90. That's a big difference. But so I get a sense, I'm watching lots of numbers, but this is something I'm going to watch. And we're going to go, well, why is this? Okay? So we have an ask. They agree on the ask. They even agree on the size. But they disagree on the bid, 215 versus 340. This is a 2.5 cents difference in price. Okay? You'll notice that what they call the bid, the lower price, or what they call the offer, these guys call the bid. This is something you have to understand. It's going to cause you problems. Okay? But this is a negative number, and this is a positive number. So if I sell something for a negative times a negative is a positive. When I first used Interactive Brokers, it was very confusing. And it's confusing when you carry on conversations with somebody. Okay? Very confusing. Okay? Now, I'm sorry to say okay so much, but I'm going to move on and show you some more here. Too many mice. Okay. I also double check everything I trade. Now, and I'm not going to come up to the solution of why we have that 340 bid in there. If you look at this, this is the same layout that I used where we had the bid ask. Okay? We look here, this is 387. Trust me, when it was 392, this one was 392. I made a mistake because I couldn't cut and paste three different things fast enough during an open market. I should have stopped the price feed on OptionVue. But I use this to check, okay, as a double check, as a cross check. And it's a very good idea to have a cross check because at times you'll say, wait a minute, I have the SPX is 1525 on this and it's 1518 here. Why? It's always a good idea not to trade if you find that sort of problem. Figure out what you're going to do to fix it. Especially do not initiate new trades when your two different price feeds or platforms do not agree. I'm going to show you. Whoa. Okay. Of course. Here we go. Interesting. I was uploaded something and I made a mistake. Okay, there is something called the COB, the Custom Order Book. And we'll see if we can get this up and running here. I apologize. Okay, so it's not on this one. The Custom Order Book, and I'll send anybody that wants the link, and in fact I'll paste it in right now, shows all the different spreads that are available at the CBOE. All the different ones that are on the book. Okay? So, one moment please. Complex. It's called the Complex Order Book. And you can look here, copy, paste. Save this link. It's something worth looking at. Okay? You can look at it by underlying and then different types of spreads. Iron condors are known as others if you look at them. Okay, this is an important one. Well, if we go back, of course, these are all blank, and look at this, I saw that there was this spread, the iron condor, the 1350, 1375, 1575, 1600 was bid for, and they call it bid on their exchange, for $3.40. So what they did was, rather than picking up individual options, they found a spread that was the same as my spread on the COB. Well, that's nice. But what happens is, it skews the information I'm getting. Okay? Which is very important to know. It skews that information. Now, right now, so the midpoint was really $3.92. Quite often, when I first put a trade in, and it's something I've started doing, and I'll trade larger size than you, and I've become paranoid about this. Is this a bad price? Is it not? I may put a 5 lot or a 1 lot in. Because if I get filled instantaneously, it tells me that I'm missing something. Okay? And it's very important that I know what I'm missing. I worry about that. But I spend an awful lot of time determining what that price is I want to do. And there's so many different ways we can figure out. I mean, I'll go through and look at just the difference between the bid and the ask. Start going down here. I mean, that's $1.10. That's $1.30. That's $1.30. $1.30. You'll start seeing that as we get closer to in the money. That's $1.90. Okay. This is geez, 270. It starts adding up. 260. The deeper in the money. This is one reason when this is a liquidity issue. If we look at volume, you're going to realize that the volume of these deep in the money calls is much less than the equivalent puts. And that's another issue I look at when it comes to price discovery and execution. Yes, somebody asked questions. Somebody has to go. So this is very important. And people, it's something we don't work hard enough at, is my experience. Figuring out what the price we're going to do. You know, we place a certain amount of faith in the clearing firms, that they know best and they're going to give us the best price. And the fact of the matter is, they are not giving us the price that we need to do. We have to do a good job. One thing I would recommend is anything I model, and you'll notice I did this with OptionVue, is I constantly model one lots. Okay, this is going to be 387. That's the cash flow. And I'll sit here and watch something and see that it may be fluctuating between 387 and 415. It might be fluctuating because the ask size or the bid size is 1. And it goes in and it goes out, and it goes in and it goes out. So there's a wealth of information, okay? And one thing I can do, for example, on either one of these, I can go away from the midpoint, okay, and put something on, let's say, this bid here where there's 108, and put in a one lot where I say, hey, I'm going to buy some of these for negative 570. Okay? Well, what'll happen is I can do the same in Thinkorswim. I can sit there and in my working orders, I can watch how this midpoint changes. Here, where they don't pull it in the spread, as to mask it, which creates a problem. You know, I can definitely see where the trading point is. Because generally, since I'm in front of the screen all day, every day, I don't have to trade it right away. I can wait. Some of you are at work and you have to react fairly quickly. But if you know what to look for, because there's so much information there, and know how to set up your screens. I can, for example, this is a customized screen at Thinkorswim, okay? And I can customize it. This is actually something, when I go to market depth on Thinkorswim, it doesn't give me the mark, the midpoint. Okay? So what they call the mark, these guys call the midpoint. This really isn't a midpoint. You know, so don't assume, anytime you're looking at these, do not assume that the words they're using are synonyms, or that a midpoint is mid, or mark. I mean, it's, you know, last is probably last, okay? But there's a lot to learn here. Now, does anybody have any questions I can answer right now? This has been actually fairly quick, but it's very, very important. You know, in summary, I mean, there's certain things I want you to know that we have to do, okay? And, you know your trading platform. Know what every number is on that trading platform and where it comes from. I mean, I would have assumed that mid on one was mark, mid on IB was mark on Thinkorswim, and they weren't. So it's my job to find out what the difference is. Now, and also OptionVue. So I knew, I can see on Thinkorswim that my one lot spread that I have on OptionVue is being priced the same way as a one lot spread on Thinkorswim. Well, the question becomes, what is the difference on Interactive Brokers? And I don't mean to point out that Interactive Brokers is an example of a problem. I mean, it's not just Interactive Brokers, okay? Also, you just so know how they calculate the spread price, mark and midpoint, okay? Know where the size is. So, I mean, I know that Interactive Brokers brings in stuff from the custom complex order book. Now, a complex order book's good because you can see what other people are trading. And what's nice about that is at Interactive Brokers, I can see what the best price is. I know what that 340 instead of 315, that somebody has a 340 order, is at 340 for a 5 lot. It's good to know. But if I'm using just Thinkorswim and OptionVue, I need to go to the complex order book, and I can go there and I can find out what it is. It's a real nice tool. And always compare your trading platform and OptionVue prices. Another thing I do is trade, since I enter everything, I compare OptionVue and my trading platform quantities. Okay, and I'll go through a couple times a day. I go through, okay, check, I have 10 of these, I have 40 of these, I'm long 30 of these. I'll find a mistake. And the question is, where's the mistake? I'll go to my trade log and each thing. And there have been times where I have entered something into my OptionVue, I'm trading off my OptionVue, and I think my risk, because I use OptionVue for risk, it's very important that both be the same, because if it's wrong, I'm in trouble. Okay? So, just very, very important that I know that. Okay? Also, before entering a trade in the wider market spreads, and that's the SPX, the Russell, the RUT, and the NDX, know the price range of the spread. Okay? If you see something's only $1 wide and you know it should be $4 wide, check and see what the problem is. Okay? So, does anybody else have any other questions I can answer? Oh, this is a good question. Thank you, Matt. Yes, I do buy at the midpoint. I start at the midpoint. And this is a mistake that people often make. We'll say, fine, my midpoint, and we had that one, 392. We'll call it 390. And ideally, I'll do it at the midpoint. Generally, in the SPX, I find I got to go a nickel or a dime. And I'm in no rush. I'll see people go, okay, I didn't get it at 390, I'll try 385. And let it sit there for a while, and they didn't get it for 385, and they decide, I'll do 375. And they don't get it at 375 after a couple minutes, they go to 350, and boom, they're filled. Well, I mean, quite frankly, that's 40 cents under the midpoint. That's more than you really want to move to sell something. This is crucial. That is one of the biggest mistakes I see traders make. I've even seen people go to the bid and offer. So they might move it to 80 cents. Okay, Frank, the bid was 340. Thank God. But Frank, the bid was 215? I mean, that'd be $1.82 difference from the midpoint I showed you on this screen right here. I know the bid is 215 by looking at the Thinkorswim screen. So no, I mean, I start at the midpoint, and if I don't get filled, I don't get filled. Some days there's less volume than other days. That's why when I look my regular screen, and we'll go back, I'll show you what I mean. The main screen I look at is it here? No. We'll find it, guys. I'm sorry. Here, I look at this market price. I like to see the change to see where the profit or loss is coming from. The original price that I traded this at, okay, that gives me a hint of what's going on and allows me to follow some of the rules or guidelines I use where, I'll cover something if I can buy it back at the third of the price and roll to a different thing. And then my existing position, I like to look at the delta because I do adjustments based on delta. I look at this. But while I'm setting up the trade, I look at this. Understand that irrespective of which view I use, this number is going to be the same, okay? And we have a host of different numbers we can look at. Okay, how patient are you when you've hit max loss and need to get out? Boy, that's a real good question. I'm starting to approach some deltas where I need to adjust soon myself, or I'm thinking about adjusting. One thing I do is I set up the trade. Let's say I'm going to adjust it at 23 delta or a 25 delta. I get in a couple deltas of where I would adjust that specific option or that specific spread. I will have the trade set up. And I may put it away from the market. And so Frank, it says, what do you mean away from the market? Well, let's say I want to adjust a iron condor, the call side, and roll up the calls from, and we'll say in this case, 1575, 1600. Well, I could roll up by buying a 1575, selling to 1600s, and buying a 16 and a quarter. I could use one trade to roll up my short 25 points, to roll up my risk. Okay? Well, so I'll do that. Well, let's say the midpoint's 250. Okay? And I'll know that I probably have to pay 275 or 280 at the midpoint when this happens. What I will do is I will place an order down below with Thinkorswim, okay, where I can send it, okay, and I'll send it. I can watch the price move, and I can do a cancel replace. Now with Interactive Brokers is a bit different because I can actually create an order, which then will go down below, that I have not sent yet, but I can watch the midpoint and I can watch the prices change in the size that way. So I don't have to put in something down below. With Thinkorswim, I do. And it's more important when I have multiple underlyings. Thinkorswim, if I was just trading one thing, I could watch it in my trade window, but it's difficult. So that's why you need to know how your how the system works, how the platform works. Okay, but Kurt had a question. How patient am I when I've hit a max loss? I'm aggressive. I mean, sometimes I will sit there and say, hey, given these markets, okay, I will I may walk if we're in a one-way up market and it's moving quickly. Okay, today we're only up 550, but we've seen it before. I may get pretty aggressive on moving something, but I would never go to the bid and offer because I mean it could be 50 points before the midpoint was where trading something hit the bid and take the offer. So I mean that's how I do it. But if I remember correctly, you're in front of the screen pretty much all day. So, I mean, we know when a sense of urgency needs to take over. We have that experience. Does that make sense to you, Kurt? Okay. Does anybody else have any other questions right now? I'll give you a couple minutes. And then I'm going to go back to watching this market. Are we resting before we go higher, or are we going to turn around from here? We've had a pretty strong move from 11:30 Central Time to 2 o'clock Central Time. I guess that'd be 12:30 to 3 for you people in the farther eastern climes. Okay, up here. Here's a question. The spread is different from IB and Thinkorswim. Which one is correct? In this case, it's Thinkorswim. IB has thrown in. They know there's a 350 bid on the spread on the customer order book or complex order book. This 340 is a spread bid. This 215 bid is based on all the different options, the individual options. I guarantee, and let's see if we go one more page. If we look at this right here, the individual options here, they're going to be the same between the two. So let's look at one of the and I could be wrong, 1375 put. I'm looking for one of the long ones. Okay, this is 390, 340, 440. Okay, now I'm going to look at this, and this is 340, 440. If we took the individual markets of these, okay, these four options, the 50 put, the 75 put, the 1575 call, and the 1600 call, and calculated what the bid was, it would be 215. The bid and ask here. So no, the midpoint here, you do this, and you've just quite frankly screwed yourself out of $60 for every single option you do. Okay? Now, does that make sense to you, G? That's why I say you have to know where these numbers come from. You know, these bids and asks are coming from an auction marketplace. Okay? And sometimes you may see things like this market here, instead of being 465.60 with a midpoint of 510, there may be a 490 bid for 5 of them. Okay? Well, that's going to move this midpoint by 15 cents to 5 1/4. Okay? And you'll get a sense on how that affects you. Okay? So if you have any questions, feel free to call OptionVue and talk to your salesperson. They can put you in touch with me. You can reach me at fjfahey@gmail.com. You can ask Steve Lentz on Inside Wire or any of the other mentors when you have a meeting with them. Walter asked me, what do we do with this? Can I ask what you mean? Okay, Walter is typing right now. Okay, my example helped him understand, and that was, thank you, G, for asking me. But it's here, we find out that, you know, the midpoint's not always the midpoint. Is it 392 or is it 455? In this point, we want to start with the knowledge that it's 392. And if you're trading the SPX, you can, it's 390, 395, because you can't trade the SPX in pennies. Okay? Well, thank you very much for tuning in. I hope this helped. And hopefully see you soon. Tune in to Steve's Inside Wire and keep on coming back. Thanks.